Investor here, bringing you another independent analysis. This time we're taking a look at ticker symbol PTX, that's Pernix Therapeutics Holdings Incorporated. Quite a long name there. The chart we have today, a 30-minute chart. Each candlestick representing 30 minutes of trading. So we go back a few weeks on this chart. The reason why I want to go back a few weeks on this chart is because, as you can see, there's a potential gap up play on this stock as well as XCO, which I did an analysis of right before this video, which was also a gap up play, funnily enough. Interestingly enough, I should say. I don't think funnily is a word. Anyway, you can see that we have a potential gap up because we had a huge selling off on this day here. Now, we had an earnings report on that day, so it looks like what happened was the earnings were undesirable, the market sentiments changed, and there was a huge selling off. We went down all the way from about $1.10 all the way down to about 60 cents. So this thing lost about half its value just on that one day of trading. Since that happened, it's just been making lower lows, lower lows, lower lows. It did have a little run up in price here, but once again, started making lower lows again. And it actually broke down all of its support levels up until today. Today, everything changed. Due to the run up in price that we saw today, from about 40 cents to about 51 cents, that gives us potential to see this run continue. And if this run continues, there is a huge potential gap up all the way to around $1. And if it does continue its gap up all the way to about $1.25 as my final price target. Now, there's a lot of work for that to happen. Obviously, that would mean that this thing is going to triple in price if it hits, well, not triple, but almost. If it hits all the way to $1.25 from 50 cents, that's almost a 300% run. So I'm not saying that's going to happen for sure, but there's absolutely a possibility that this thing can gap up all the way back to around $1.10. $1.15 and $1.25 would just be icing on the cake. Now, there's a few reasons why we might see this gap up happen. Number one being the fact that we had that run today. That changed the entire look of this chart. Number two, the 200-day moving average, this red line. You can see once we had that selling off, we broke down below the 200-day moving average. And this entire time where we've had the candles going lower and lower, we've been below that 200-day moving average. But it got closer and closer and closer until today. Today, we breached that 200-day moving average in a bullish manner, and we worked our way up to that price target of 53 cents. We didn't quite hit 53 cents though, but we got to 51, which is pretty close. The main thing is that that 200-day moving average is now below our candles. So that means where we have a lot of resistance that is now broken. There's still a resistance to cover. 54 cents, 64 cents, 90 cents, $1.15, $1.25 as the final price target. Support, unfortunately, is still relatively low, all the way down here, back at about 40 cents a share. Now, we do have our moving averages all below the candles, so those can act as support, trailing support in a sense, but the real hard support's back here at 40 cents. So what would have looked great is if the chart actually did break that 54 cent area and turned 54 cents to support, but that didn't happen, so our real support level is still down here at 40 cents. So what we want to see happen tomorrow is we want to see a break of 54 cents and we want it to turn to support. Now, if you're risky, you can buy it open, but I would not recommend that. What I would recommend is waiting for 54 cents to break. And if 54 cents turns to support, we might see it run up to 64 cents. Now, if you're very conservative, you can actually wait until a potential break of 64 cents. Now, that might not happen. Of course, nothing's a guarantee in the market. But what that would mean is if you wait for the price to get to the 64 cent area and you get in here at about 64 cents, then you're going to have pretty smooth sailing all the way to 90 cents, which is a huge gain from around 64 cents to 90 cents. It's a huge gain. So that's probably what I would do, honestly. I mean, there's still resistance to cover here, 54 cents and 64 cents. And, you know, getting in at 54 and selling at 64 is still a really good trade. But 64 to 90 is a lot better. Now, I think there's a pretty good chance that if this does break 64 cents, that it does run to 90 cents. Because if you look here, there's really no resistance the entire way. It'll be a clean ride up. And I was looking at other historical data as well, and there really wasn't much resistance to cover on the way up here. It could be a really clean gap up. Now, 90 cents, of course, isn't my final price target at 125 is. 115 is up on the way there, but you could just easily get in at 64 cents and swing it to 90 cents and get out there to be safe and still make a very nice chunk of change. Get out there, look for a break of 90 cents, maybe look to re-enter there for round 2 and swing that to 115. Obviously getting at 115 and selling 125 isn't such a big gain, so by that time you probably missed this run. So I think the most conservative thing to do would be to look for it to get back that 64 cent area. I wouldn't buy into this just yet since it's been in such a strong downtrend, and really we didn't break key resistance today. It just kind of initiated a run. So key resistance 54 cents and 64 cents. If 54 cents breaks, you can try to get in there, but the run isn't guaranteed yet. If 64 cents breaks, then I think this chart will start looking really good, and then we can see a pretty steady gap up to 90 cents. So that's probably what I'm going to do. I'm going to watch this the next few days. I'm going to look for it to break 54 cents, but I'm not going to buy in there. Most likely, I will wait to see if it tests 64 cents and breaks the 64 cent mark, and then I will have a nice, easy ride up to 90 cents if it stays bullish. So I wouldn't jump the gun and buy here yet, but just keep an eye on this. The run today did initiate a potential gap up play, so look for those support levels, rather look for those resistance levels to turn to support, and you could have a very nice gap up play there for you. So just keep an eye on this one. I'm going to be keeping an eye on it for sure, and I'm definitely not going to be buying into it yet, but I'm going to be watching for that gap up potential. That's really all I got to say about the chart here. The RSI wasn't really telling us much information. With the current movement that we've had, looking at the candles, the support resistance areas, and the moving averages gives us plenty of data. So I hope this analysis helped you guys out. Any questions, please leave a comment below. I'll check that out immediately and get back to you. And with that said, best of luck, guys. I'll catch you later. Take care.